An exchange-traded fund, commonly referred to as an ETF, operates as an investment vehicle that mirrors the trading characteristics of a stock. In a similar manner to various other fund types, ETFs pull capital from investors to create a diverse collection of investments encompassing stocks, bonds, and other securities. By dispersing the fund's assets across different securities, ETFs inherently offer investors a means of diversification, a pivotal factor in managing risk. These ETF shares are actively traded on stock exchanges, rendering them purchasable and saleable akin to stocks, albeit subject to transaction charges and associated fees. Much like the assortment found in mutual funds, ETFs come in diverse categories, each with distinct objectives. Some ETFs distribute investments across a mix of stocks and bonds, while others emulate the performance of prominent stock indices such as the S&P 500 or Dow Jones Industrial Average. Further, certain ETFs shadow the trajectory of specific market sectors, like technology or pharmaceuticals. Nevertheless, the degree of diversification differs between ETFs, with sector-specific ETFs offering less diversification in comparison to those aligned with index replication. Understanding ETFs. To delve into the realm of exchange-traded funds, it's imperative to comprehend their operational dynamics. An illustrative instance will elucidate the process. Assume an investor seeks a diversified investment mirroring the S&P 500 index performance. After meticulous evaluation or different ETF options aligning with the investor's objectives, they procure shares through their brokerage, akin to purchasing individual stocks. This acquisition endows the investor with a stake in the basket of investments constituting the chosen ETF, all achieved through a solitary purchase. This consolidated approach spares the investor the effort of researching and analyzing multiple individual assets, achieving returns. Consequently, how does an investor potentially generate a positive return from an ETF? Analogous to stocks, two avenues emerge: capitalizing on a surging ETF market price and reaping dividends. Ordinarily, an increase in the ETF's underlying investments corresponds to a rise in its price. Suppose the investor acquired a hypothetical ETF at $40, and a year later, the ETF's market value reached $50. In this scenario, the investor could realize a $10 profit per share upon selling their position. Naturally, a decline in the ETF's price would result in losses if the position were sold at a diminished value. Notably, many ETFs trade on stock exchanges throughout the day, offering a real-time buying and selling opportunities. Nonetheless, some ETFs suffer from limited trading activity, potentially complicating order fulfillment. Contrast with mutual funds. Contrastingly, mutual funds predominantly transact at the day's conclusion. Beyond price fluctuations, investors may derive earnings through ETF dividends, representing a portion of the fund's profits and capital gains. Yet, not all ETFs dispense dividends, as several reinvest profits into the fund's holdings. Evaluating a fund's dividend yield can disclose whether it pays dividends. This yield quantifies payouts relative to the current share market price. Distinct advantages. ETFs boast an array of appealing attributes. Unlike many mutual funds necessitating substantial minimum investments, ETFs facilitate entry with the purpose of a single share, coupled with commissions and fees. Given that most ETFs operate with passive management, their associated management fees are generally lower than those of mutual funds. The spectrum of ETFs encompasses diverse asset tracking, including corporate bonds, foreign equities, commodities, and even currencies, each carrying distinctive risks. Nonetheless, ETFs tracking these assets provide investors with a pragmatic approach to scrutinizing and potentially capitalizing on various market opportunities. For those seeking a deeper understanding of ETFs and other investment avenues, a wealth of educational resources awaits through TD Ameritrade's premier offerings.